Hello, everyone. Sorry for the late start. Was doing the Jim Aereo Futures Edge podcast. How is everyone doing? Huge rally. Hey, Jake the Snake. Good afternoon, Jacob. Hello, Options 22. Jake, is it too soon to ask for your planner's punch recipe? I'll give it to you. Got it right here. I saw that question pop up, so I got it out. If you wanna write it down. We have 6 ounces of Myers dark rum, 6 ounces of your favorite light rum, 6 ounces of your golden rum, and this will make a picture of it. So that you're gonna have to adjust it. I never make one at a time. You can't. You got to make it because then it's got to sit. 3 ounces of Clement French liqueur. It's a French Caribbean liqueur. It's an orange flavored liqueur. You need 3 ounces of that, and I would use definitely Clement. You can look it up. You can get it at any good liquor store. 12 ounces fresh orange juice. 12 ounces fresh pineapple juice. Don't use the crap from the can. Get some cold pressed pineapple juice if you can. 3 ounces fresh squeezed lime juice. 1 ounce, I use closer to 1.5 ounces of grenadine. Again, don't get the syrupy stuff. Get some real grenadine. Any good liquor store has it, or you can order it from like Amazon. Don't get the sugars, whatever that roses grenadine. Don't. No. You got to use real grenadine. If you get real grenadine, make it closer to 1.5 to 2 ounces. If you're using the fake crap, the corn syrup stuff, you can use only 1 ounce of that, but I would steer clear of that. Then I use orange bitters, a teaspoon, and Angostura bitters, another teaspoon. Mix all that together and let it sit for about 3 hours to start coming together. So if you're going to have it in the late afternoon or evening, mix it in the late morning and let it all come together. Shake it a couple times while it's sitting in the fridge. Let it all come together. That is the custom Planter's Punch recipe. Sorry for all you non-drinkers out there, but if you definitely like a good Planter's Punch or a rum-based drink for the summer, definitely the way to go. I took a few years to perfect that one. Definitely worth investing in some of the better alcohol too. Don't make it with the cheap stuff. That's why you're using Myers dark rum, at least. Or if you have another favorite dark rum, but don't use a really cheap dark rum. You want the depth of flavor. Hey, Christoph. What was that all about? I think you're referring to the rally. The rally. That's not the rally. This? Look at the volume. I want to see again, we're still finishing out the futures, but look. Look at the three of the 4 days of sell-offs. And look at the volume today. The volume today was even less than the rallies last Thursday and Friday. This was just there were no sellers. Still. And if you look here, here's April 3rd. We're at the same place. We've got a whole bunch of nowhere. Now, this did invalidate. Remember, the double top did not trigger in the S&P. It is now off the table with this rally. Let me just double check that because I didn't. I was on the podcast. It might not technically be off the table. We'll take a look. But I have it off here for now. So that's where we stand. But pay attention. Remember, the volume is on the downside. These weak, nobody's sitting around selling to the upside. Let's look at NASDAQ. Again, you had just the low volume Monday, which was a slightly lower close, but just lower volume and barely lower close. But then you have Tuesday, Wednesday, Thursday sell-offs, and then today. And today even was lower than the rallies last Thursday or Friday. So that leads me to be very suspect. What I reviewed, and I'll just let that when the podcast drops on Monday, I gave you some things I was watching potentially for an upside breakout that had to happen. But one of the things is you need volume. And volume, remember, also we have weekly cycles now. We're about 15 minutes to the weekly close, but this isn't changing much. Weekly cycles are confirmed rolling over. So we should have downwards pressure for probably the next 4 weeks. Okay, maybe 5 weeks. That doesn't mean every week has to be down, but there's downward pressure. So any breakout to the upside is fighting the cycle topping pattern. By the way, we had an island reversal on SPY and a close above the 62.5 May 1st to May 4th harmonics. Is this bullish? Let's call up the spider. By the way, let me get to this one. This from May 1st to May 4th, you had the close just above that. You could see some follow through again next week, but that's only short term. And this isn't real. I don't call this a island reversal because it's in consolidation. This is still in consolidation at support. This is just going to be a really big gap magnet, but you want to do when this is in consolidation, it does not mean as much. So yeah, you can get some short-term follow through next week. Still have a gap left up here, but you know, the double's off the table here, but that's not a long-term bullish signal. You could see a little more follow through to the upside. Hey, Paul. Now I can afford one of those fancy deep dish pizzas. They're not that expensive. I mean, it's more expensive than Domino's. Way more expensive than Little Caesars. They're not that expensive because you don't need to eat a lot. Jeez, they're so... Is this a drink channel now? Well, I mentioned before the Planner's Punch recipe. I said I'd give it out. This is a food, a drink, and a music, and a technical analysis channel. Come on, you can't just live and die by technical analysis only. You have to have some good food. If you drink, you have to have some good drinks. If you don't drink, well, you can have some good non-alcoholic drinks. Hello, Vertical Dimension. Hey, Josh. Might need a little clarification. So the Fed cut rates, if the Fed cut rates, that's bullish or bearish. I've noticed some find it bullish and other. When the Fed starts cutting rates, it's generally bearish for equities and the stock market. Okay, it's because crap's breaking. And you generally get downwards pressure on the markets, and then the markets bottom before they finish the cut cycle. Right now, though, just to clarify, people are looking for any reason still to be bullish. Well, all right, today. Oh, good unemployment figures. Let's buy the market. But if bad news comes out, oh, the Fed's going to have to pivot soon. They're already pausing, so now they're going to pivot. Let's buy the market. It's just, let's buy the market mode. But again, low volume rallies or lower volume rallies. So when you make it, let me know, Jake. I hope you got that down. If not, rewatch when this goes up, rewatch the, and write it down. But don't skimp on the ingredients. Can we look at CF, please? By the way, yeah. VIX, did this take it off? I think this did also invalidate the double. Look at that close. Look at that. No, it didn't. Technically, it had to, because we didn't raise a stop yet. So it technically did not invalidate the double because it didn't trade down below the 75 and it closed above the 62.5. Oh boy. Can we look at CF? This is now, by the way, CF. This is not, it's in triple bottom. And this is not a double bottom. And when I say triple bottom, it's this bottom, this bottom, this bottom. And you can even see it on the, let me get here. The weekly, you could still trade it, but it would need a weekly. If you're going to trade this, you now need a weekly close above here, not a daily close. So you can't trade this on a daily basis anymore for the double. So it's still technically on a weekly basis, but it's not on a daily basis. Other than that, you're still in consolidation. If it breaks down, because it has not triggered, that's why you gotta wait for those trigger points. Let's just do the harmonic projections lower, because now it's got that daily triple, which by a couple percentage points favors. It's only a couple percentage points, but it still favors the breakdown. Ooh, look at that. Just want to see where those harmonics would take us, because look at this area. Resistance, support. So you start breaking down below 67.95. 65 area, 61.50, and 55 are the key targets to the downside. Let's just see if anything's in the way. And all right, 61, about 60 to 61.50 would be a very key target, first target zone. And you see here, running up to the weekly rotation zone, rotating back down, just not breaking to new lows yet. Do you see a double top in NVIDIA? Yeah. It's the challenge is with this big sideways base. So really the breakdown would be going to 264. I'll leave it up here, and the final target's roughly that 50, but I'd be really on a break below this key low. Unless there's another intraday rollover signal, I'd be targeting 264.50. For from the short side. Other than that, for the upside, if it breaks again higher, you have 294 stop raise, 297.67 target area for the middle minor levels. You have to believe in something. I believe I will have another beer. Sounds like a good plan, Daniel. We have been at SPX 4135 at the end of April 2021, 2022, and 2023. The good information, Pavneet. What do you think happens with the regional banking crisis? I think they'll keep rolling stuff up into bigger banks. That's about it. I think they'll keep bailing things out and rolling them up into bigger banks, unless it really gets bad. I think they want to consolidate things into bigger banks. Then don't get me started, because then we probably then they'd use that as a roll in, which we need a central bank digital currency. Can I look at EA? Yeah. Let's see. When are earnings for EA? That's next Tuesday. Well, I mean, besides short-term holding against this 200, this is not a double bottom, but you start getting above this 127.50, you have a gap left behind. There's just major resistance up here at this 130 area. Let me correct the harmonics. So you see here, it's a 50% harmonic. That's your key. So if you're going into earnings, I mean, is there a fantastic pattern just yet? No. But if this breaks below about 123, wouldn't want to be holding it. Would break the 50, break the 200, and break recent key support. So if you're at all bullish on this, I know where my stop would be. Okay. Would not want to be an owner. And then where would a, because we could easily make a trip back to 119 to about 116 really quick, and you still have a gap left behind down there. But as long as this holds up, you got earnings next week. If from any long plays though, if it got back to this 120 above the 129.30, 129.50, at a bare minimum, I'd aggressively be raising a stop because you're going into all this resistance. Even if you look from a short-term area, if it was going to break, your next harmonics are these topping areas from last November and early December. So I'd use those levels to raise, again, trailing stops from a long position, and that's only if we do not close below the 50. Would I be bullish or bearish on CF? Well, back to CF, I'm bearish on it unless we would trigger this weekly double. Why? Because you sold off at rotation zone, rotation down, rotation zone, rotation down. What's the trend? You're down. You're below key support. So you had support broken. Couldn't even get back to retest that level. The only way I get partially bullish on this is if it triggered the weekly double. Other than that, I'd be looking for lower prices. Thank you for the super chat, Pavneet. Thank you very much. Really appreciate it. Everybody give a shout out to Pavneet. You're welcome, Paul. You're welcome, Amit. Downside targets on BTI. Downside on BTI. Let's take a look. British Tobacco. Let's see. Yeah, I was going to look at something that pays a very nice dividend. This is something I'd look to trade, though, around a core position. I was going to say, before I even looked, I'm saying, because British and Japan Tobacco pay really good dividends. But here's the levels I'd be utilizing, especially if you close below about 34.75. Target 32.30. 29.81 would be downside targets, and this is areas when I talk about trading around core positions. I love to use these harmonics to look for reversals at these key harmonic levels. Again, you have a decent dividend. The P to E is only $10, but you can use it to harvest price, because price you're collecting potentially close to an 8% dividend. If it sells back down, the dividend, of course, on a yield percentage goes up. You can use it to harvest price. You look for buys, and then, you don't want to sell going into X dividend dates. But as long as you are not going to mess up collecting the dividend, you can, hey, I'll collect some down here and up at some other key levels. I'll maybe unwind a little. On dips, I'll buy it back. Because the price does not have to go anywhere to collect a really decent dividend. So you start breaking below 34.75, 32.30 would be the next level. That is a harmonic. And you see was a key low from October 20th. This is on a weekly time frame. If you're looking at the daily, and for these dividends, I really like to look at that. But daily, you have minor support about 33.70, then this 31.60 to 32.20. If you want to see the most recent harmonics going down, and why I teach this stuff is because everybody can do this for themselves. Look at, here's your levels. So this is how I really like to line up levels to figure out where I'm interested in stuff. Past price action from December of 21. Here's your key support. And this only matters if you do break below these recent lows. So here would be the first target, 30.45 to about 30.65. And then you have 32.30 to 32.46. Now, is this a potential horribly sloppy double? Let's take a look. Not quite yet. So if you're watching for a reversal pattern, it would have to get a little lower, 35.25. As long as it trades below there and doesn't really break down, then you would have a potential double on here. And then you could put up the double targets, but then I'd be watching for a break higher and the weekly rotation zone would be out of the way. So if I was being patient, but this came into double territory and then, okay, we pop up and it starts running higher, well, I'm obviously not going to wait for the pullback then. I'm going to have to go with that and also go to, for your dividend. Your ex-dividend date looks like it's Thursday, July 13th. So you have to be an owner as of ex-dividend. And then if you're an owner as of ex-dividend, your payment dates, the next payment is in Wednesday, August 23rd. Would you consider to dip into the 15-minute rotation zone this afternoon on S&P? Yes, I would. We've talked about that before. This, not this. Not the end. This is, I'd wait for confirmation on Sunday evening with a rotation up. This afternoon, if you're talking about late morning, this momentum bar breakout, remember I've talked about, you get to the European session close area slightly before it switched to the 15-minute. Watch for those 15-minute pullbacks in the rotation zone. And here's your nice rotation back up and your run up in the afternoon. So has this rotated back up? No. Here's what you can watch for, though. If you're trying to micro trade this on Sunday night futures, you have rotation zone little mini double. That is a valid little mini double in the 15-minute rotation zone. Do I have a crazy classroom on house signals? Sorry, house dogs barking. Right. No, I don't have a crazy classroom on how signals work in rotation zones. What I'm watching, if you want something, there's a couple things I watch for. Either strong reversal candles like this one. You can always draw. See this nice little trend line? Watch for a key close above it with a rotation. So you dip back down. You see here, you can see it on the 5-minute, and a key close back up. Those are the kind of things. Or you can watch for patterns like this. You can get a double in a rotation zone, remember? So it's easier when you have a double because now you have the key level to watch for. But many times you'll get these, whether you draw a trend line, whether you draw, your flag pattern, your pullback channel. That's an easy one. Don't overcomplicate it. When to exit if it fails? Well, like from this, all right, your double, if it's a double and it triggers, then use a close below the 62.5 as worst case scenario, or a trade below the 75. If it's this, I like to focus on an early warning sign. I look for candle bodies if you're looking for an aggressive exit. So if we got a close, not a trade below this level, a close below this level would, all right, if you're getting aggressive, we broke out and then we get a close back below this 41.32. That's the aggressive stop level. Conservative, and I'll look for not just this key low, but why I would utilize this key low is look, what is this? Emotional candle, momentum candle, pausing bar, and then breakout, retested. So that would be my conservative exit if I wanted to give it more room. Hope that makes sense. You don't need to get more complicated than that because you're trading with the trend. You just have to decide on, aggressive or conservative. When we have strong momentum, I'm more likely to go with an aggressive target because especially when we break out in the morning, consolidate during lunch, or early, this actually sort of breaking out into lunch, but pull back, European close, pull back, and then break out. We should resume the trend because it was a strong trend morning, so I don't have to give it a lot of room. Hi, Balaji. Can I check Shopify? Well, you do against your key harmonic. Let me pull off these other ones. There we go. You do have a little potential topping pattern. Actually use the conservative targets. Now it is lower probability because it's against, it's a very minimum. That's a minor one. But it could give you a warning sign. I mean, other than that, if you're looking for an aggressive thing, that would be about it. Other than that, on a daily, even a 4-hour basis, there's nothing yet. That would be super aggressive. What would I watch for personally? I watch for the downwards move and then to see how strong the secondary reaction is. Especially with something like this. These levels are just insane. But we've already hit a key harmonic. So if it does continue to run, that's your only little mini pattern. The next levels higher are 67.25, and then major resistance would be 77.35 if this insanity does. But that's the only thing. And that 15-minute is a 15-minute pattern only. That does not mean something to like short for the gap fill. You could come down and then bounce back up. You're going to want to watch for another bigger pattern setup. Well, why do you have Coco is still alive 2? What happened to Coco is still alive 1? Could I check DXCM? Well, I already think I can see what you're seeing. There's your daily pattern. $122.32, $123.50, $124.75 on a weekly basis. So you already have that. Trading against some. It dropped below this breakout level, but it's still on this little breakaway gap level, still held that as key support and formed that double. Let's see what it looks like on a weekly. So still holding the weekly rotation zone, little pop up against, and then a reversal against key resistance. But this is something that this is one I would definitely consider. I mean, I don't know. It's trading at a hefty P to E ratio. Although if it did break out from here above about 125, I would utilize about 132 to 133 as major resistance. It's just trading at very hefty valuations. But definitely this could be a pattern that if it comes up here, you could hang on for some of it and try for a breakout. Am I still streaming under the sun? No, I have shades open. I just didn't close them. That's why you get glare. Sorry about the glare. It's just because I'm such a ray of sunshine, Coco. That's why you tuned in. Tell me your 2024 well, yeah, they'll be okay. What? I think Nvidia will be in for a fall at some point. And you have January 2024 puts. I wouldn't worry about it. You're trading at a PE of 158. Again, this market is insane. But look at the PE ratio. Almost 24 PE ratio at the end of this week. Schiller PE ratio is 29. Let's just look at the Schiller. So we're above it at the .com before the crap, and then even the last big financial crisis, look where that was. We're above where it was at the highs of that. We're above where it was on Black Tuesday. Yeah, we've pulled back a little, but this market is no bargain. Again, price to perfection. Beyond price to perfection. Why do I bring that up? Because I think the reward to risk, you can trade it to the upside. There's still trades to the upside, but don't get married to positions to the upside. And we'll get some severe and sharp pullbacks, especially in very overvalued stocks. And Nvidia, I'm putting into, it's not like this is trading even at a growth multiple of 40 PE. This is trading close to 160. Hey, Jake, thanks for the super chat. Thank you. It is a mind-boggling market. Pep wants gold. Pep, is that the only market you follow? Back into consolidation. This is not a double top. I'm still watching for a pullback, unless you'll have to watch the podcast because I gave the levels I'd be watching for a breakout. Other than that, I'm still watching for a pullback correction. You're welcome, Balaji. Pan W. Well, when are earnings on this? You got a couple weeks out of earnings. You do with this, if you start breaking above this week's high, not only is it a rotation zone entry, it's a percent B buy entry as long as the weekly closes there next week. It would need a weekly close, but it could be traded on an intraday basis on a break above today's high. Really, you start getting above about 188. I'd really be watching for that run, but let's put on back run higher going into earnings. Key level to watch for on the closing basis. If you're trying to get in a pattern early, though, you want to see a close above 193.28 for some follow through. Mike with the 200 MA very close around 39.70 SPX and upward sloping. What levels do you think would signal major damage? I went over that. I think we still have the double in place. Major damage, as I said on the podcast, a close below 39.77 is going to be major then. major, then we're going to start, that would be a bigger rollover move. Because everything would be out of the way then, and we close below the 62.5. And we'd have closed below this upward sloping channel, which this is the initiating point, this is the defining point. So then I'd be targeting down here to 38.85 to 38.39. A close below 38.39. Watch out below. We could start the unraveling. Crude oil triggered again on the break from this high, then follow through close is a percent B buy, but the percent B buy is just into the rotation zone, which is pretty close. At this point, minimum target about 72.50, moderate targets of 74.30 would be the first two targets. A stop raise could be done at 72.50, and a first potential profit target could be done at 74.30 in the daily rotation zone. Based off this also, I always like to, and you know, where based off this, you know, you get dropped below 66.70 again on a closing basis, don't want to be part of it from the long side. Not only have you violated the key reversal candle, you've also dropped below the 62.5 on the up move. Now remember, you can also use that for trailing. Who says there has to be a crash? There doesn't have to be a crash. Now, when's the down move? Who knows? We got to do some damage, and we'll get more of a down move once everybody stops buying the dip. Yeah, it's tough. You can always remember, you can always sell some short-term premium to compensate. So, especially on spikes up. All right, what else did I... WEAT, the wheat fund. Well, you're getting closer back to daily cycle tops. I'd be watching for a more solid bottoming formation. So I'd start watching for any kind of pullback below 678, and then a better bottoming formation. Because you're getting the daily cycles, getting to topping area. So I'd be watching for a top to potentially come in early next week, and then watch for the secondary reaction to set up more of a bottoming position. Longer term, you're at some pretty major support area it's trying to form a bottom at. Now, it's going to have to do some multiple probably gyrations because you are against the weekly rotation zone. But your key support, if you notice here, resistance, resistance, resistance. Trying just a little drop below it, but trying to form some support, confirm support there, trying to put in support here. So, I'd be watching for some kind of retest this area. And then if the support holds, it could set up for a potential long play. But the long play is going into the rotation zone, so it's got to be more aggressive with raising stops. The market doesn't have to crash to see a bottom. The market can just unravel slowly. We didn't have a crash in like the bear market of the .com bust, it didn't crash all at once. It just took a long time to unravel. The market always crash. It doesn't always crash unless you have a very different definition from crash. The market doesn't have to crash, and a capitulation move is different from a crash. The labor market is still strong. But we also talked about the labor market on the podcast, so you'll want to tune into that. With that, I'm going to wrap it up. Start Cinco de Mayo early. I got to take the dogs out for a walk. It's finally gotten to 74 degrees here. Finally, some nicer weather. So I hope everybody has a wonderful evening. Again, thank you for the super chat, Jake. And thank you for the super chat, Pavneet. Big shout outs to both Jake and Pavneet for supporting the channel. And with that, I hope everyone has a wonderful weekend. Just remember, for next week, we still do have earnings season going on. We covered a couple of them. But earnings season is by no means done. It doesn't end with Apple. So don't get caught off guard with that. And you still have some key things like we talked about Nvidia coming up after that. So we can still have catalysts that move the market one way or another, though it seems like dialed down earnings, and if all you need to do is beat them, and you're good to go. You're welcome, Christoph. I'll talk to everyone next week. By the way, there will not be a live stream Monday afternoon unless something changes. I have an appointment I cannot miss at 3 p.m. right at the cash close, and there's no way I'll be home by 3:30. So we will have to see. But I'm doubting there'll be a live stream on Monday afternoon. Just giving you a heads up. Bye for now.